Good morning, I'm Tim Carter. I'm a Client Portfolio Manager on npower's Optimisation Desk, and welcome to this morning's market update on Friday the 13th of January. A strong bullish run towards the end of yesterday sent prices soaring to new highs for 2015 as late buying interest and increased fears over full-year Dutch production caps exaggerated the recent bullish run. Today prices have corrected downwards, with the key drivers being, number one, temperatures are warmer today, decreasing demand and resulting in an oversupplied gas system, but weather runs overnight suggest that temperatures will stay flat into the middle of March and negative delta to seasonal normal levels that may support prices. Number two, a ceasefire was agreed yesterday for peace in Ukraine, but the market remains sceptical about how long that might last. And number three, the pound strengthened markedly yesterday against the US dollar, following the Bank of England playing down fears of deflation and increased GDP growth projections. Those are the main headlines, but if you have any questions, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So the UK gas system is oversupplied today, with line pack currently forecast 7 MCM long, as demand has dropped back to seasonal normal levels. Also with CCGT demand scaling back as the gas prices soared yesterday. Elsewhere, supply levels are fairly flat with yesterday, with the exception of storage withdrawals, with Rough nominating just 15 MCM, down 25 MCM from yesterday. Gas prices this morning have shed more than a penny on the front month from yesterday's closing prices, mostly as markets correct from an overbought position yesterday. March 15 is now trading at 54.5 pence per firm, while the summer 15 contract is at 49.15 pence per firm. The power system is again comfortable with peak margins today of over 12 gigawatts as demand drops to under 51 gigs, and there is strong wind generation of over 5 gigawatts currently. Liquidity is pretty poor on the power markets first thing this morning, with high uncertainty around fair pricing following this week's high volatility. March 15 is yet to trade, but the contracts are offered at £45 per megawatt hour, having closed at around 45.25. Meanwhile, the summer 15 contract has opened trading at £45.2 per megawatt hour. That's down 15 pence on last night's close. The ceasefire deal for Ukraine agreed yesterday morning did little to suppress any fears of Russian supply, as the market maintains a high level of scepticism around how long it might last, especially with Angela Merkel admitting there was still a lot of work to do, and Bloomberg reports of more Russian tanks rolling into Ukraine as the talks were going on. The recent weather forecast might make for bullish reading, which may support prices as temperatures are forecast to stay at around 4 degrees on average through the next 30 days. This is a revision lower from previous forecasts. Meanwhile, it's worth being aware the Brent benchmark contract has now moved on to April delivery, which is currently trading at $60 per barrel, while coal and carbon markets remain firm, trading at $63.25 and €7.4 per tonne respectively. That's it for this morning and this week. We'll speak to you again next week. Have a great weekend.